What's going on, guys? Get started in a minute. How you guys doing? Let me just change it up. Good morning. Good morning. I'm in a little ES long right now. Scalp. Take some trades during the stream. I'll close this for right now for a small scalp so I could say hi to everybody. All right, give me a quick sound check and we will be good to go. Hopefully everyone's doing well. Took a couple trades this morning, nothing major. Stopped out on a few and then took back those points. We'll get started in a second. Keeping an eye on this. Sound is good. All right, guys. What's going on? Happy Friday. Made it to the end of the week. It's been a good week. It's been a very good week. All right. So before we get started, make sure that you hit the subscribe button. Hit the like button. I appreciate that. I am trying to spend more time on this channel, going live now 3 days a week. So it's going back to Mondays, Wednesdays, and Fridays. I'll probably take off at some point in June because we rented a house on the beach again, like we did last summer and the summer before, something we do every summer. And this is the first time we're going to be doing it with our little one. And this time we are not having all of our family and friends over. We rented a house that sleeps 12 and it'll be just for the three of us. Problem is, whenever you go away on vacation and you have like an open door policy, you don't actually get any time to yourself. So a summer ago or 2 summers ago, you guys remember I was sharing that house that we rented that looked like a big boat. It was on Fire Island in New York. It was right on the water. It was beautiful. Pool in the deck, like amazing view, awesome modern house. And we had an open door policy for basically all of our friends and family. And there was one period where nobody was there for like a period of 4 hours. Between groups, right? Between one group coming and the other group leaving. And at that point, we were able to experience actual solitude. And we thought, God, next time we go away on vacation and rent a house, we're not inviting anybody. We'll rent a big house, but we're not going to invite anybody. We need that peace and that solitude. Anyway, good morning. So market opened up an hour ago. Before we get into it, as a reminder, nothing that I say is financial advice. This is strictly for entertainment purposes only. I'm not a financial advisor. Consult your financial advisor for anything with respect to your own portfolio. Shout out to the partners. This stream is powered by Bybit. There's a link below. There are new bonuses available. So whether you're depositing $1,000 or whether you're depositing $1 million, you're going to be entitled to certain bonuses. I think the top bonus is like $35,000, but that's if you're depositing. I think you got to deposit like $250,000 for that. And yes, you have to KYC. But if you deposit $1,000, you get $100 towards your trading fees and towards your trading. They still offer a form of non-KYC access. So you're going to be limited to withdrawals like every other exchange now, right? You know, you're limited to the amount you can withdraw. I will say that just keep in mind that all exchanges are going to be probably moving towards implementing KYC. So, you know, make the adjustments you need to. Get on the exchanges that you're available to. But I think in the near future, like all of the major exchanges that offer some form of non-KYC access, I think that's going to be eliminated. That's just my opinion. I'm not saying that based on having any information. And then you'll always have like your shadier exchanges that pop up during that time when everyone else goes KYC. You know, when BitMEX went full KYC, the same thing happened. When Binance went full KYC, the same thing happened. You have exchanges that come up and they gain in popularity because people actually do really appreciate being able to trade without giving all of their information. But like I said, you know, coming from a traditional background like myself, even when you're trading on a like regular brokerage platform, like a TD Ameritrade or like you know, what's it called? Interactive brokers. Like the amount of KYC or the level of scrutiny that is put on you to open those accounts is miles beyond what is the like top KYC for crypto exchanges. So I think you should appreciate that. But shout out to Bybit. Links are below. Also sponsor of the stream and good friends of mine, the guys over at Crypto Watch. Crypto Watch is a phenomenal platform. I've been sharing this platform for the last few streams. I use this platform. I'm just waiting for them to make the final adjustments so that the ladders are connected to all of the exchanges that I use. So as you can see, let me just change this color real quick. These are the ladders. The screen's not adjusted properly right now, so I will open these up so you can see. But you guys know, I appreciate trading with a ladder. I came from trading on ladders using trading technologies back in the day. It makes a big difference. It makes a big difference in terms of speed. Also paying attention to the overall flow in the market. You're paying attention to, you know, who's advertising, who actually has intention of getting filled, you know, the orders that are hitting the market, how the market is responding. It's obviously the same thing. It's a little bit more high speed than looking at a footprint. If you look at a footprint, you don't have to worry about remembering anything. But just using a ladder, I think it puts you at an advantage, especially if you're a lower time frame trader. Using a ladder makes a big difference. Using a ladder in crypto is a little tougher because it's really volatile. So you have to, I think the best thing for you to do if you're using a ladder trading crypto like BTC or ETH or alts is to change the aggregation so that it's more than the standard tick setting. So for example, if you look at my ES ladder, if you look at my BTC CME contracts ladder, the tick setting on, for example, the lowest tick setting for the ES is 25 cents. So that is one tick. There's 4 ticks in a point. So 1 point move is $1 move. And that is going to give you the rawest look at the market. You're not going to really see anyone who's using a ladder trading the ES, you know, increasing this aggregation because the market's not moving that much. It's not that volatile. I mean, it's, you know, can't really say that now because the markets have been really volatile. But if you're looking at BTC and you were going to put BTC on like a $1 or a 1 point aggregation, 1 point tick setting, like it'd be impossible. The market would be all over the place and you wouldn't really get a good view if you're trying to, I guess, glean anything from that flow by looking at the lob. So remember, lob is a let order book. So just in terms of speed, I mean, for example, if I just want to tag on orders in the ES, you know, I could very quickly, let me just cancel that. I could very quickly tag that on right through the ladder. So immediately if I want to put positions on, if I want to place stops, right? Very easy to do. All right. What else? Anything else? So the ladders are going to be available hopefully soon. I mean, some of you guys might be able to trade with the ladders on their platform. Check out the links below. Their desktop platform is phenomenal. As you guys can see, I have a bunch of templates that are set up and available also to you if you go to my Discord. So the link is below. There's no catch. It's completely free. So I have, for example, we have this Binance open interest and funding page. So I have the depth chart, we have a regular chart, and then we have just an open interest chart. And these are all completely customizable. So I have my books, right? So for those of you that are used to using like Okotoki, Okotoki is a great platform, but you could do all of that. You could replicate all of that in on Crypto Watch as well. All right. So for the sake of this stream, so if you guys remember, I went on a little bit of a rant the last stream. I don't know if it was a rant or if it was just me like boiling over a little bit. And well, a little bit, you know, just backstory. So like a month ago, I started streaming and I just started doing what we're doing right here. So what we'll be doing for the stream. And it might not be exciting. It might be exciting. Depends on what the market does. But I was just trading during the stream and kind of narrating my thoughts and taking questions in between trades. And then I got back to charting during the stream. And ideally, the ladders would have been set up already and I'd be able to trade during the stream on CryptoWatch platform. But it is taking a little bit. They have a lot of, obviously, they have to make sure that everything works perfectly. But I just got back to charting. And charting is, it's useless. It's boring. It doesn't really do anything. I mean, not that it doesn't do anything, but charting is just not a big part of trading, honestly. And not for nothing, chartists, people on YouTube that are just charting and pointing out the levels and where they took trades. And, I do it too when I'm talking about charts. I talk about where I took a trade. I refer to prior streams where I talked about levels and, I'll pat myself on the back here and, that didn't work out over there. And the point is, this is just one very small component of trading. And it's just market structure for the most part. That's what we're talking about when we're looking at charts. And obviously I will look at charts with, funding and certain positioning metrics and open interest and, chart certain pairs with relation to each other to see whether or not there's anything to glean from that. But other than that, it's like that is not going to make you, being a good chartist, being able to spot the levels is not going to make you a better trader. Now, yeah, I guess I could say that spotting levels is helpful, right? Like it's to your advantage to be able to look at a chart very quickly and to immediately be able to pull at least something from that from a market structure standpoint. Like where is the market being accepted? Where is the market spending the most amount of time? Is the market imbalanced? Is it balanced? Are we rotational and range bound, or are we in a strong trend? Like these things you should be able to describe very quickly. But it should be it. Like, I arrive to my desk in the morning. I look at a few charts. I always have a screen up with charts. I'll have like all markets on a screen. We're talking about like stocks, bonds, certain currency pairs, certain crypto pairs, mostly the majors, and then maybe some alts that I'm also paying attention to. Just seeing how markets are trading with relation to each other. But other than that, like I look at the chart in the morning, I look at a TPO chart, get my levels. And then once I know my levels, I'm writing them down. Like I said, they're either, they're on a Post-it on my screen because I enjoy that. Or I'm writing them down on a notepad, or I'm writing them down on the notepad on the computer and leaving them up on a screen. And I know the levels. I'm trying to memorize the levels at that point. And you could do a lot of different things when you have a ladder, for example. I could actually just put my levels on the ladder. So, and this would probably be able to, this will most likely be a feature on CryptoWatch ladders too, where I could create a column on this ladder right here, and it can just be notes, right? So I can mark off my levels on the actual DOM. So I don't even need to look at the chart anymore. I want to always have a chart up to look at rotations, right? To see, overall what our rotation sizes are, how price is trading throughout the day. I use a non-time-based candlestick chart, right? So I'll look at that. I'll look at a TPO footprint from time to time to get an overall idea for whether or not there's some kind of cadence or rhythm in the market. But again, as far as determining levels, which is what most people do on trading streams and talking about levels, like once you have them, there's really not much to talk about, right? It could get really redundant and boring if you're just streaming talking about charts and you're saying the same things over and over again. And not for nothing, you're saying kind of the same things that everyone else is saying. And I don't think you're really getting anything from it by being a viewer, right? Some people might say things differently. You might be able to, pick up more from one streamer to the next. But again, it's just a very small part of trading. So this stream is going to be just me going over the levels that I am paying attention to and that I'm aware of, some thoughts about legacy markets, some thoughts about BTC and ETH. And then we will take a look at some of the alts that I am currently in position in and looking to get filled more. So I am in OP, APT, so Aptos, I should say these out, Solana and Doge. And I have on basically quarter positions, and I'm looking to get filled in some kind of pullback. I think that I think it's dangerous to try to call the top on BTC and ETH, but I do think that there are certain pairs that against those pairs are pretty battered down, and they're relatively new. So Solana isn't necessarily new, but Solana is, as I've said, I've used this phrase multiple times. Solana is a sort of darling of the last cycle. So I think that what was a darling of the last cycle has a, it's possible that it'll continue to perform well into the next cycle. So bigger picture, I want to always keep an eye on Solana. A mistake that I made a couple months ago at the beginning of the year when I was killing it in alts was thinking Solana was going to outperform then, but there was just too much overhang with bankruptcies and funds blown out and people that probably owned a good amount of Solana that had to sell it still and that were looking to get out at any kind of higher prices. So what I thought was Solana was going to break 30 easily, and we topped out below that. But I think big picture Solana is something that I definitely want to keep an eye on for next cycle, and I think that you're absolutely getting a next cycle. So as far as Aptos, Doge, OP, I think these are Doge I'm long Doge for its own reason, but Aptos and OP I think are good longs just because they're new. There's not a lot of price history. There's a lot of attention at these pairs, and structurally and flow-wise, they look attractive. So, first things first. What do we have? Any kind of news updates? Anything that's worth talking about narrative-wise? It's really clear that the S&P does not want to drop. So let me just maximize these charts a little bit. So we'll put this actually on a higher time frame chart real quick, even though this is normally my low time frame chart. So price wise, I've said going back months now that 41.50 and 42 is the zone that bulls need to show control through. So it's probably going to be better off to act upon 42 rather than, as you can see, act on 50, right? So a lot of times you'll hear me say, I'm going to use the last two digits to talk about price now just because it's easier. Otherwise, I get kind of tongue twisted, especially if I've had tea in the morning, my mouth's all dry. But 41.50 was a good long up to this current high, right? It's a good sign of strength, but I think 42 is like that's the final threshold for price to go through that will bring in a ton of activity into the market. We're kind of knocking on that door right now. I think there's a lot of people that are eager for that price to come because at that point, like if you're not long, you're wrong. But we could completely die out below there. So I think you want to give respect to price and say 42 rather than 41.50. 41.50 it should be the multi-month highest close going back like 10 months now. So it's a good level because monthly has not been able to close through that. So if we're able to close out April through here, that would be significant. But I want to see a really strong move through. I want to see price begin to base out through there. And we're doing that now. Like we had a pullback. We based out over the last few days, which is great. This move up initially was on really no breath, no real support of the market. So you want to see price consolidate. You want to see the S&P do what the S&P does during bull markets, right? You want to see that it moves up, impulses up, consolidates, catches people off sides, betting on, the end of everything always, and then moves up and kind of just grinds up over time. And it's not anything spectacular. There's obviously spectacular periods, but for the most part, it's just impulse, consolidation, building value, impulse, and then building sort of brick by brick. The market it's better to build up like a brick wall rather than build across like a bridge without anything under us. So I think we want to see that we're continuously establishing value after big moves like this. So that's exactly what we did from 4,000 up to 41.60. So had a strong move, had a pullback at the level, built value, and now we are trading above for the most part where all of that value is established. So this is the last couple day composite, right? But ultimately this is going back to the third. This is at this point, this is over a week long composite. So building that below us, now accepting above. We had a rejection though, obviously this morning. The market is just showing a ton of strength even in the face of bad news. So this is the behavior of a bull market. I don't know. I'm mindful of getting too excited. It just, we're missing that major component of bull markets, which is that excess liquidity in markets. And right now, I mean, if you just look at a chart of overall liquidities in markets, liquidity in markets, there's a chart I have on TradingView I could give you guys. But if you look at that, it's basically double topped right now. So we want to see, I mean, without liquidity, the markets are not going to be able to continue to move up. And this morning, there was some Fed talk that, we've had signs of a recession, which have led to, bad news that is bad for price now. But this morning, there was Fed talk, I forgot who it was, about the inflation target not looking like it was being met or them not doing enough work. And ultimately, this just speaks to higher for longer. And the market is right now pricing in them coming off by the end of the year. So, it's just a really tough environment to trade right now. It's hard to make any kind of long-term predictions, but when there's a bunch of negativity in the market and there's reasons for the market to move down, but it's not moving down, that's a really good sign. So we want to hold, I think, ultimately for this entire structure for the S&P, we want to hold 4140. I mean, if we look at the entirety of this structure, 4140 is basically, that's like the POC for this entire range. So where the high volume node is for this entire composite, as long as we're trading above where most of the volume is coming in and building above volume, then, bulls are in control. The last thing we want to see is us is to lose basically this, you see where these highs are and that 4140 region, that POC area for the last couple of days, losing that, trading back below the midpoint of the structure, you're putting a lot of bulls off sides at that point. There's a lot of people that have come into the market up here. And at that point, it's much more likely that you quickly trade back down to 4110. And then we'll see from there. I mean, again, as far as like this market continuing to move up, you don't want to start trading back within these structures. And if anything, you want to hold the midpoint. So if we're back down at the lows, then, we're probably in trouble, especially after poking up towards 42. And we're going into just from a seasonal standpoint, sell in May and go away. There is a good amount of reasoning for that. Markets it's not that markets have not trended in summer months. There absolutely has been. But the last time that evidence was really strong was actually right after COVID. All right. So after COVID, there was a ton of liquidity injected in markets, and there wasn't a lot you could do, honestly, in that summer or during that summer because you were so restricted depending on where you were. I mean, most places were. But overall, volumes drop, liquidity drops. And as silly as it sounds, like major players in markets, the whales, they don't sit at the trading desk anymore. They leave their office, they go on vacations, they're in the Hamptons, they're in the Bermuda, wherever they are, right? But they're not actively sitting at the desk hammering it out day in and day out. So we're coming towards the midpoint of April. If nothing major has happened by, first week of May, second week of May, then I think you should probably take that as a sign and not get too aggressive through the summer. Like, don't try to force anything. There's no reason to. All right, so let's go back down to low time frames. We'll take a look at BTC in a second. So just to show you where I'm looking to get involved. Ideally, it doesn't have to be that right now this is a lost cause. A big reversal like this. So let me just pull my I messed things up real quick. Let me regrid this window. Here we go. This can come all the way back down to, like I said, that 4140, 4150 region even. It could come back down there, and I'm not necessarily going to get too worried. After one move above this composite, I don't think necessarily it's likely that we are going to get a one move like this and then a reversal back through this entire structure. Yesterday's profile was not exactly substantial in terms of structure. Like, it's not like we built much. We basically just accepted through prior value. So I'll open this up. So we had a Dalton setup. So we accepted through prior day's value area low, traded back up to the value area high, ended up trading obviously towards the day's highs and above. So we haven't really built much in there. So it's not like there should be much that can get in the way of price here. And normally I would sell acceptance back within this composite. So this blue box is a composite. And it's also, again, in terms of local context, yesterday wasn't exactly, there's not a whole lot that stands in the way yesterday from a structural standpoint. So these are the single prints right now that we're tapping into. But I could see, and normally this would be an area where I'd look to get involved, I could see us coming as low as something like 4140 before we get some kind of bounce. But we'll keep an eye on that either way. I mean, if this starts trading back above this 4160 region, so if we get something like this, we trade back above 4160 and we see this is rebid right here. So rebid meaning, buyers are stepping in. We're getting more absorption at the lows. Imagine that you have some of this selling activity and now that heavy selling 300, 400, 500 contracts is trading higher. Then I'd probably look to, I'd start looking for longs. And I'd be using, it's a 3-minute chart, but I'd probably be using something like the 2.5 or the 1000 volume. So 2.5, 2500 tick. Because that is going to be good for just slower term view, but a pure view of activity. So start looking back above 4160. Probably get a big move if we are able to, one sec. So just laying out some opportunities. If we're able to stay bid above 4160, I'll look for a play back up to the opening range. So right around, that is... One thing that is difficult is 4166, so a 6-point move that might be attractive to get behind. Or if we get extension from there, not able to grab that. Honestly, acceptance after development back above this region, so back above that composite. If we get acceptance back in the opening range, I don't see why this thing does not easily slingshot back to the midpoint of that opening range. So my opening range is a 30-minute opening range. So you could do on your settings an initial balance on an EXO charts or a Sierra chart. You get an initial balance for 30 minutes. Some people use 30-second. That is said to be like the CME opening range. I don't know whether or not that's true or that is from a local though on the CME. So a well-known CME trader who really holds by that the 30-second opening range is very significant. I used to trade around it too. It's just become less popular in my trading. And I wasn't sure if I was seeing things or if it was that actionable. But 30-minute opening range has always been something that I keep an eye on. So, and that is the 30-minute opening range, not of the session, including the overnight session. That's a 30-minute opening range of the RTH regular trading hours. So keep in mind, we're talking about the S&P right now because this is going to dictate what happens with BTC. So especially at this level of extension, the S&P starts pulling back majorly and we see a 50-point, 100-point move, then BTC is going to be topped out up here as well, at least until we, at least in the short term. One sec, let me get these two things to meet. So as it is right now, we ended up taking the overnight range, the overnight low. So we're below overnight lows. Again, if we trade back within that opening range, I think that it's easy for us to just tag at least the middle. So 4166 to 4178, that's like an 11-point move. That's not bad. And then that would be a really good sign of strength back above that composite. If we just melt down from here, again, I'm going to keep an eye on that 4140 region. I don't want to write this off and get short unless we are trading back below 4140. And to clarify, normally if I have a composite like this and we're breaking down and showing signs of absorption on the retest cleanly, I might short through that composite back to a key level within. And in this case, I'm actually just going to hold off on that because I don't know if we end up, we could end up coming a few more points lower, not get the extent of that move, and then get some kind of whiplash. All right, so eyes on that. See if we might get that absorption right now above 4160. So you have sellers coming in. Make sure I have a stop order. We're going to keep it light during streams. So during these streams, you're going to see that I'm going to be trading the micro Bitcoin futures And then also going to be trading probably just 1 or 2 lots on the S&P. So one lot on the S&P is 230, 200. This should be upwards of $230,000 notional now. So it's not like they're small positions. But I think for the sake of trading during the stream, it is difficult to trade during stream. It's not impossible. I've done it and been profitable during 90% of my streams that I've done it. But it is something where you don't want, there's no trading on its own is very difficult. So, trying to do that while you're streaming, and I kind of want to bid this I just want to see a little bit of a pop up and then rebid at that 4160 region. I don't want to buy this prematurely. Want to see sellers come in, so you got some sellers there. I'm going to go for it. Why not? Stop below that low. 4-point stop. I could just cut this manually if we start. See, now we're just. Give it a second. I'll just cut it manually. I'd rather wait. In this kind of position, I would have wanted to see a faster response and be in profit sooner. If we're going to be scalping during the streams, there's no reason to hold something and then just to be stopped out. We'll look at BTC in a second. Just want to keep an eye on this just because it's right at the level. Could put this away if we end up trading back below 4154, because then I think you're going to come down further into that. And feel free during these streams to absolutely ask questions, pick my brain. Take a look at crypto in a second. Just want to keep an eye on this because it is being rebid, but it's not like we see a ton of aggressiveness out of this area. I mean, it's honestly sellers have been in control basically all morning after that pop. But there's not a lot of volume. It is a Friday. Yeah, so that was a good thing to get out of rather than being stopped out. All right, so let's take a look at BTC. We'll keep the DOM on. Let me just mark off a level. Well, so this is the low of the day, that red bar. I actually don't have the column on right now to set the level on, but that's okay because 4160, it's not impossible to see that. All right, so let's take a look at BTC. So let's go to a high time frame chart, higher time frame. So again, just going back, we're back within. We're going all the way back to 2020, May 2022. I don't know why I was saying that like it was a long time ago. So May 2022 range down here. So the top of that is right around 32. Right, 32. It's a little bit higher than 32. But as I said last stream, the midpoint of the structure, the POC, which was right around 30, I think that was right around 31 or it's right around 31 or 30.50. Midpoint is right around 30.50. 30,500, excuse me. So that is where we are having trouble. We had trouble slightly below that, almost into this. So the high of that was 31. So just an area where you would expect, the market re-accepts into a range, high time frame range, so back into a carve out. After a really extended move like this, is it going to travel from one side to the next without a pullback, or are you going to get a pullback at mid-range and some kind of development there before possibly pushing higher? You're more likely to have some kind of consolidation and development. As it is right now, we've stopped at 31, and now we have a little bit of heaviness in legacy. Legacy also pushed into a key level. So, I don't think this is an area where you want to get aggressive. where you want to get aggressive with BTC. You know, BTC can come all the way back to, you know, that 29, 28.7 region, retest that, develop there, and then see us leave from there to 32 just as easily. So that was that 28, 29 region. That was, you know, we're tapping that as resistance going back to mid-March. So like month-long resistance at that point. So I don't think that it's unreasonable if we came back down there to test that. I think that that's the first area you would want to look for support, right? This kind of move. So this kind of move is, you know, the kind of move where you would probably see if we looked at it on a 30-minute chart. There's gaps there. So you have single prints. You do. So we have a couple singles back here that have not been tapped yet. So I'll just mark those off. And I'm not using a TPO chart on this. They are going to integrate profiles, but I know they're not doing that yet. But you don't have to use a TPO chart to spot single prints, right? All you have to do is have a 30-minute candle and find the area where there's no interaction with befores and afters. So meaning the next 30-minute candle open is right there. So the area where it doesn't meet the bar. And then this area right here. So that is a gap of single prints. So I should just use this to extend it forward. Instead of that, hold on. Or does the box extend all the way? Hold on one sec. Maybe it does. Maybe I could use that. No, it doesn't allow for complete extension. So single, single. So that is a single print gap. And then more gaps, more single print gaps, or one more right down here. So 2 back-to-back gaps of singles. Now, what is that basically? And why is it actually reliable as support? And why should it be at least the first retest? Those are stops being blown out. So gaps like that occur after these kind of breakouts because there are stops being blown out. So there is a ton of positioning built up. There's a bunch of stop orders placed here as people are just walking into this. As I said multiple times, I was hedging. I probably hedged 3 or 4 times within here, but this is not an area to outright short. If you're looking for a short, you have to see a very quick response. You don't want to see price kind of hang out in the same area for long. It just allows for, it just baits people in. So because we know that this was a good amount of stops blown out and shorts squeezed, we can also assume where some people put their stops, where, you know, we could assume that where some people put their stops, other people put their stops as well. And that where some people use stops, some other people might not use stops. So it's more than likely that in this region, you have people that in these single prints, so in those gaps, specifically where the book flushed through, that you actually have people that might have been their invalidation, but they're still holding on for dear life. So we know that if the market comes back down to this single print gap, the first one, it's likely to bounce around 29.5. And that's just sort of structural bounce or mechanical bounce based on the shorts that were involved here, right? The shorts that sold here getting out at the best possible price they can, right? So we look for a bounce here as they cover and then possibly a bounce back down at this level. So you have the level working because it's market structure, right? Resistance for a month. And then you have the level also working because you have buyers, you have sellers that are still underwater that would be looking to get out around break even. So with the S&P pulling back, and we're still at 41.57, so not 41.60 yet. If the S&P pulls back deeper and we start trading back towards 41, we start trading back towards 41, we've been back down towards 4K. Excuse me, drinking my Essentia water. Then yeah, this is more than likely going to be topped out, right? Just explaining the possibilities. And it wouldn't be completely off base after this kind of move, right? So if we look at both moves, just big picture wise, again, markets like to pull back halfway. That's where you see a good amount of mechanical buying come in. If this was topped out here and we're looking at some larger pullback, you could even see it coming all the way back down to 26, right? Gap here, Prior market structure high, 50% level. So just something to keep in mind, just future areas to keep in mind if you're looking to get involved in what likely will offer another bounce. You know, the worst possible situation would be us trading below 24, but I think that obviously we're ways away from that right now. Intraday wise, we have a 3-day composite up here. So if you were to go on EXO charts, you'd see that between around 30,400 and down to 29,008, 29,009, we have a 3-day composite. A good amount of value overlap, if I recall correctly. So let's just see. I'll take a look at the TPO chart. So S&P is now back above 4160 by the looks of it. Wait for the TPO chart to load. So I don't want to be, again, buying prematurely. We're just putting in lower highs. So let's see if we can rebid right there. 4160's bid. Give it a 4-point stop. And what you'll see is if I think I'm wrong, no matter what, even if I just closed out a position before prematurely, I will cut this as well. So ideally, seeing 4160 hold, we get to move back to the opening range low. So now you want to see just like that sellers are coming in, but the market is trading and ticking higher. So that VWAP is right around VWAP as well. It's right through that opening range low. All right, so we'll leave that for a second. Got the stop on. And as I said about the multi-day composite, so it was a good guess. We're actually back. I'm about to get stopped out on my ES trade, back below 4160. See if it needs a little development there. Multi-day composite right here. So 40,476, and it's actually 29,613. That was actually the inside day setup. So get rid of that. Let's merge. And my dog's ears flapping. So it's actually right here. So below today's lows, down to, what did I say originally, 29.8. So if we could accept below today's lows, I think you're just looking at a move back down to 30. And am I going to be cutting this again? Because this is as low as I want to see it go right here. I want to see a little bit of a higher low form right around this rebid area. Right? And then continue to push up. Now, this entry was a little premature, so I should have actually waited for a little bit more development. So we're looking at a 1,000 volume chart right now. So selling coming in now and trading back below. It's not necessarily, you know, again, sellers in control kind of all morning. Building slightly higher. Just not doing it though. Ran that stop. Did not take mine though. It's got to push here. Otherwise, either getting cut or stopped out. I'm just going to look through the chat real quick. Not feeling it. Just going to close that out. Oh, I hit the wrong. Okay. That's all right. Close out in the same area. So just flat on the day. Well, down a 1.25 points, which is not really anything. So I don't know if we're going to get a bounce right here at that composite, but again, it's all dependent on if the S&P is going to be trading lower. Yeah, this level's doing its job. So I mean, I think it clearly has to be above 4160 to even consider this again. And there's no reason. So you'll see I place a stop, but there's no reason that I should, there's no reason for me to let my stop get hit if I'm not confident in it. And you could see that every time that I've not been confident in it, I would have been stopped out further anyway. So I get out for half of the pain of my stop. And this is just scalping during the stream. This is not swing trading and you know, putting on longer term positions that we'd give more breathing room. At that point, I wouldn't be looking at the 2,500 trade chart. I'm just going through the chat right now. No lawnmower today, no. That was driving me absolutely insane the other day. But I'm really happy because they did a great cleanup job on my yard. Yeah, you know, I could see someone want a short right here. It's just, I don't know. I watched what happened this morning when the market ripped up after ultimately a bad announcement or bad, you know, what should have been a negative catalyst. And that's obviously positioning driven, but I do think that this level deserves respect for now because it was a multi-week level. So I don't want to just sell it without giving it a little bit of time. I'd rather honestly look for the long. But there's a good amount. Obviously, you could see there's a lot of volume that's taking place right at this level. So this is looking at just like a 3-minute chart. Go back. We'll go to a 1,000 trade chart just to clean it up. You can see this is the high volume node of the day right here at 4160. So 4160 goes and we're trading back above and we have support there, then again, high volume node, highest volume of the day. The next one is at the, again, the opening range low. You have a gap between there. You have a gap between there until VWAP. So, but I mean, so far the level's doing, you know, you have buyers coming in and getting shut down at the level. If I put this on a higher aggregation, I mean, there's a ton of selling coming in through there. They came through that 41.55 region. Let's go back to my original setting. Yeah, baby sunburn is something obviously we have to watch out for. Babies have really sensitive skin, and we don't keep her outside for long. What's going on, Metaphor? Thanks for joining. What platform would you recommend for TPO besides Sierra? I don't know. There's a lot of different platforms. NinjaTrader. You could get TPO on, I believe, on Thinkorswim. So this level is doing its job. The more it does its job, the more it makes me want to sell it. The dollar's pushing up. I'm like finger on the trigger to sell that and just stop above 41.62. But this can easily put in a ripper right through. You see how strong the market is lately. So a composite is, so it's not a dumb question. So a composite is when we're looking at TPO charts and we're seeing where price is spending the most amount of time, right? Where value is developing, where the thick portion of the distribution is. This is our value area. So this fat area, it's a little bit, it's differentiated slightly based on color. I'm used to it. If you're new and you're asking that question, you probably won't notice what I'm talking about. But a composite is when I form multiple profiles together. So maybe this is a sell. 1 second. I'm just going to sell with a stop above there. Give this one a little bit of breathing room. I'm either going to regret that above that stop. What did I say? 41.60. What did I say? 41.64 before. As long as the dollar's pushing. I mean, this 41.60 level is doing its job. So we'll give that a second. Stop is right? There we go. Come on. Give me a little bit of a, give me a puke. If it starts burping, I'll probably close it out. Come on. Come on. It is difficult to be in position and go over things and leave the screen. I want to explain to this guy what a composite is, but let me just close that out for a few points and get to that. All right, so composite is so for example, like these two profiles, right? These last three profiles. Here is a very balanced profile, right? Here is a less balanced profile, clearly, and then a very imbalanced profile that followed. The last 3 days, though, between this profile and this profile, this is completely overlapping that value, right? So I would definitely combine these to get an idea of where value was over those last 2 days. If we have two profiles that are very much in line, if their value is very much overlapped, then I end up just combining them, right? Because again, if I'm looking at a profile, I'm just looking at where the market has been accepted, right? Where are, in terms of buyers and sellers, where are they shutting the market down? Where are they doing the most business? If I have two profiles like this, for example, so this profile is just a normal, it's not a, I don't even remember the names of distributions because it's not really that useful. Sort of a normal variation profile. With this value area, it's not the most balanced profile, but it's definitely, if we open this up, it's not necessarily an imbalanced trend day. The following profile is almost completely inside of that value area. There's more than 50% overlap. So I will combine this, and this is a composite. Now I could do this for multiple days. I could do this for a period of weeks, and it just gives me a cleaner idea of where value had been established over that period of time. But you want to do it when you have overlap. I'm not going to combine, for example, trend periods like this. I'm not going to combine a series of days where value had been migrating either higher or lower. There has to be value overlap. So if I combine these two profiles, now you see that 4140 area a little bit more clearly because we combine these two profiles, and you see that this is the, what just happened there? You see that this is the meat of the distribution for those last 2 days, and that's the POC. Sorry, I closed that trade out and probably could let that one run, but not getting too confident about anything. As I said in the beginning of the stream, I don't want to be the thing about shorting that level is I just thought it wasn't a trade to prioritize, because I do think we could get the balance between 4140 and 4150. So the last thing I want to do is like not be perfectly short from this level like I just was down here, have a move down to 4150, get excited, get off screen, and then we end up ripping back up, and I get stopped out, but I missed closing that because I'm on the other screen explaining something. And I don't necessarily want to put just to take profit, because I'd rather monitor the trade during the trade most of the time anyway. This connection is Rhythmic. I'm using Rhythmic, Sierra Charts, Edge Clear Broker, and Phillips Capital. You don't need to know all that. All you need is a broker and software. Yeah, I always monitor Apple, Steven. That's a great question. You'll see me actually, if you just go to my Twitter and like search in my name with Apple, you'll see that I constantly talk about Apple and Microsoft. At one point, Apple was like 7% of the index. I forgot what the weighting is right now. But actually, I'll check. So SP index component weighting. It might be like 4 and 5 now. So it's no, Apple's back at 7% of the weighting. Microsoft is 6, so slightly above actually. So 6.2 and 7.1. So yeah, absolutely. Because when I said that whole move was on limited breadth, I was just talking about the fact that it was just moving up basically because of Apple. So Apple does most of the lifting for the index. And you'll see like during the bear market, I kept joking around about Apple. And if Apple wasn't holding up, we would be in much worse off shape. All right, let's take a look at those alts. So the alts that I am in, like I said, Aptos, Optimism, Solana, Doge. So there is that acceptance into that composite actually. So what did I say? We'll probably see this come back down to 30K. So I was like a second away of shorting this during the stream on the CME Futes. So again, just to reiterate, 29 8, that was the region of the value area low for the last 4 days. So this one move was a deviation. Now we're back within that range. I think you could get that extension, but I would be looking at 30K first because that just is a big round number. ETH BTC, I think that either way, I would rather be more focused on BTC ETH right now than BTC. I think it's unlikely that ETH just double tops this. So this range, BTC broke out of its consolidation. ETH just did. You have to keep in mind these things are not, you're talking about a longer term move. It took a long time for this to occur. It's not going to be a quick change overnight after it does occur. So I think you want to be focused on this 2K level now to see that hold, right? So again, big round number, final break through this structure. Is it a matter of this just being too little too late though? Depending on equities, it's possible, but if we see support in equities and we begin to base out again, right? We come down to 41.40, maybe tap that and trade back above 41.60 and we're back out of that composite. I would rather be in ETH than BTC. I mean, looking at ETH compared to BTC, it just looks like there's a lot more room for this to run. Bitcoin is already from that break up 23%, and ETH would basically have to have basically that same amount ahead. So if we just adjust this to where it currently is, it'd be a different story. You're looking at a 17% move to do the same thing, right? Which would be basically accepting back within a gap, accepting back in an area where price had been really imbalanced after breaking through a multi-month consolidation. Accepting into that area, most of the time, while it will take a little while, you're going to move from one side of it to the other. And where you'll have trouble is you'll have trouble at the midpoint of that structure. So that's right around 25. So a lot of times you'll see that the market will develop value in this region before it gets there. So you'll want to see that it continues to grind through and build a base. But I mean, your targets would be right around 2250 and then 25, bigger picture. Again, this needs the full support of the market though. This is not going to do it on its own. As far as alts go, when it comes to Solana, again, Solana is something that I want to keep a bigger picture view on. It's not something that I think it's time is of the essence, right? If we look at Solana, it's still within this is a multi-week range at this point. So we haven't broken out of this. It's rebid at 20, which is good. So again, key level. But sort of it's stuck between a rock and a hard space. It's that 30K support level that was broken. We got close to that, but not quite. We're at the lows though, but we're stuck between there. I think that it's clear if we're above 26 and that is support and we're able to break through that level and see this bid, that Solana is going much higher. But in the short term, I think things that are more exciting are actually things like, Optimism, for example, that $2 region being rebid. So that this is a very limited price history. There's really nothing to this. $2 region being rebid. I think this is looking like it's basing out quite effectively. I would keep an eye on this. You want to see this continue to move sideways. Again, if depending on BTC or ETH, what they're doing, I think this is, if they're going to move sideways and hold up and equities are holding up, I think that this has a much bigger move ahead of it. Going on the daily, could see that even just if you're using something like a trend line break, I mean, it's probably not the meatiest area to go from because you want to, for example, one sec, let me make sure that okay. You would probably rather see this break horizontal levels, but there's been no closes. This is just pointing out a series of lower highs. there's been no real closes through any kind of prior levels, prior highs. So for example, to 280 region and above, if we're able to find support above there, at that point the move is already, obviously there's a little bit behind you, but I think the fact that it's holding this $2 level, going back to that high, if BTC and ETH are holding up, I think this is attractive, not because necessarily just because of technicals, but because it is a newer pair. So that's most of the argument, that it's a newer pair and that it is showing signs of strength around a key level. Now, Doge is something that I want to own, and you see a couple other people talking about this going into 420. I think the meme potential for this is there. This, other than this morning, is starting to put in a pattern that looks reminiscent of much larger pumps. So where you have this slow sort of grind and smile upward, it begins a parabola. And a lot of times you'll see bigger pumps within it like that will get retraced, but will continue to hold the line grinding upward. So I think as long as Doge holds 8 cents, that I'm game with this. You definitely don't want to see Doge start trading below, 8 cents into that 7 consolidation down here. So I think, you probably get away with saying slightly lower than 8 cents. I personally wouldn't want to see us lose 8 cents. But I think that I'm just leaving this as a possibility for something that, maybe as a result of Elon or someone else going into 420. It's just a meme day. Doge benefits from that. And then Aptos, again, just kind of basing out around a key level. So that $10 level. And, it's a big round number. It's not a big round number, but it's an obvious round number. This has, again, very limited history. And by the way, when I draw it, so I'm not a person who uses diagonal trend line support and resistance. So when you see me draw this and I'm not getting it precisely on a close or a high, sometimes it really works out and I will obviously just put it right to that. But when I'm doing this, all I'm doing is pointing out what the eye sees, right? Which is a series of lower highs, right? So just progress down. So when you start basing out and the market is moving sideways long enough, clearly it's going to break through any of that progress down. If we start trading back above prior highs in that move down, then it's, clear that this is beginning to majorly shift. The whole point of me just drawing the line is not to give an actionable threshold for it to break, but just to point it out that it is descending over time, but it is still holding that horizontal support level. So that $10 level, I think, is significant. And I think, again, this is a newer pair. This is just under a year old, I believe. And if we're going through a period where, again, this all depends on ETH and BTC basing out and consolidating rather than majorly correcting. I want to own the things that other people are really interested in. I think they'll have the greatest potential to put in the highest returns. And if something like this is basing out at 10, I think that it's very likely that it returns back to its all-time high, or at least accomplishes half of that. So basing out around 10, want to ultimately see, like I said last night, that I want to see that 11 holds. So I think that the fact that we held 10 is fantastic, but I personally want to see this consolidation hold. So that's a good amount of accumulated positioning. If that goes, this could get ugly. This is just a single rejection, big bounce, and then a smaller, this is the more violent bounce, and this is the more gradual accumulation. I want to see 11 hold. I think that 11 is a good entry for probably 15, 16 region at a minimum. And then again, depending on how the rest of the market looks, this could be something that goes much higher. So let's see what happens at let's make some sure everything's displayed properly. Sorry about that. Oh, I don't think this shows my account info at all. I don't know if you could do anything with my account number either way. That's why, so I usually just eliminate my account number from the DOM because it used to say it during the stream, and it's like 7R or something. Either way, it can't do anything, but for the sake of privacy, and maybe it would, I don't know. So let's see. I don't know. I mean, get rid of this composite right here. Keep an eye on this level at 41. Right around that zone. So the point is, I wouldn't want to short into this hole. Let's fix this. Let's make this a little bit better looking. There we go. I mean, this is not exactly the most attractive flow to trade right there, right? Just the way that price action is. It is something that, again, we're breaking back in that composite, but the last thing you want to do is get short into something that's building up a ton of pressure, and then you get a ripper that cleans all those highs in one move. That's why it's taking a second to load. I don't know. It's a good amount of open interest coming off of this. So again, tap that point of control that I pointed out right before we broke down, right? That's the area where you would expect price to at least temporarily bounce. So what did I say? 30K region, but that POC, first sticky area. Now, if this is going to continue, you'll see that this little gap, the little stop run around 30,003 should reject price. I mean, there's a lot of selling into this low. So anything standing out? All right, so it's probably something you want to sell. So there's 15 million on the bid at 30,250. So the chances that that person actually wants to get filled are probably very slim. So you'll see that if oops, he gone. So that is just someone spoofing any kind of attempt at feigning strength. So now back on the best bid. So 7 million. And they didn't buy in, so it's not like they decided, I'm going to just ape in, because we didn't see anything cleared in the offer. That is someone more than likely. So when I see that kind of behavior on the bid, so going back a couple streams, there's like 50 million in the bid as well. A lot of times that's just trying to project confidence so people buy into the offers above, which is the true positioning, or positioning with true intent. So the fact that we just changed the screen and that was there right away, this price action almost looks like an iceberg. Not clean, as clean, but you can see someone sitting right on the offer, absorbing that on ETH spot. And that level is actually trading. So 64s are printing. So someone is actually absorbing that. But it looks like there's actually more trading at 63. So you could see really nothing at 63. But there's a lot more 63s that are trading on the tape. So actually this probably, I wouldn't be surprised if this popped up. But again, there's a lot going on right now. That futures buyer that clearly doesn't want to buy, you have to think about that. So I don't know if we should really think about this popping up necessarily, but it looks like there was a hidden order getting filled. And again, normally you would see with an iceberg or a hidden order getting filled, one side of the book populated like this, the other side nothing, but the other side is trading. This isn't even taking anything. Again, 4 million. Not a lot. That's perps as well, so it's not tremendous, but stands out. It does look like an iceberg, actually. You shorted 30,008. Good for you. Should you get out? That's all dependent on you, man. I can't tell you what to do. I'm short from, so I didn't say anything on Twitter, because if you say you're short BTC, it's just you deal with a lot of headaches. But I'm short BTC from 30,700. So, and just to prove that we are not making that up. 1 second. Here is my, hold on. I think you could see, hold on. I don't want to dox anything. So I have the position open, and we will show without showing my, oh, it's not going to show my account info. I have it all blocked out. I figured out how to do that, so never mind. But you could see that is my short. Can you? Oh, no, you can't. Hold on. Let me move it over. This is stupid, but there are many people that say they are short or long. And how would you know unless you saw? I forgot how I cut the screen up. So there we go. That is my short position that I'm currently in. You could see a little flip the position if I wanted to. But yeah, that's so that's not an outright short. That's a hedge, right? So I'm not, and I've hedged multiple times at this point. That's just a hedge. Hold on 1 second. I'm getting a little lost now with stuff on the screen. Okay. 1 sec. There we go. Okay, yeah, because you could see. Oh, because I have crypto. There we go. Let me just. What's going on? Better. All right. Sorry about that. No. Not demo account. No. What made me hedge? Just a gut feeling before bed. Gut feeling before bed. I had a few alt longs on, so I figured that I was hedged. If I was wrong about a slight pullback in BTC, that my alts would make up for it. But I wasn't filled to the extent of the alt positioning to where if I was wrong about excuse me, let me clarify. If I was right about the short for BTC, I wasn't filled to the extent that the alts would have hurt me. So I'm just kind of making sure that I don't have too much exposure right now because again, we're not through that 42 level on the S&P. Everyone's getting really excited. BTC has put in a significant move. It's starting to feel like people are getting really excited. And again, the level that I've said going back to months now is 32 and above. So I've been talking about different areas and carve outs, right? So above 25, up to 30, the levels between 30 and 32. So that little range going back to May 2022. But big picture, 32 is that's the range low for going back to summer 2021. So I mean, if you're looking on the daily, we had one big move down, but I mean for the most part, you're looking at the lows of that consolidation going back to June and July and May in 2021, right around 31.7 to 32. So being back above that would be back above, we would mean we're back inside of that massive range. That'd be a different story. Until we do that, like that is, again, going back over this, I've said it many times, this is the most significant level on the chart, this resistance. So there's trades between it. Like I had a hedge that I closed out. What did I close that out at? 28.8. So if you guys remember, I kept saying I'll close my hedge out. It was actually 28.4 or 28.5, and then I ended up closing it out at 28.8. But that was just for another trade opportunity that I thought would have legs. But again, just kind of keeping everything pretty zoomed in. But yeah, last night I just decided to hedge kind of on a whim. Obviously, a bunch of things adding up, and listen, I hedged before I went to bed, and the market hadn't dropped, right? The market was still at my entry when I woke up this morning. Sometimes it just helps to sleep relatively flat. I mean, what do you mean sometimes? It always does. During the bull market, it was like there was this fun lottery that you'd play, right? Where you would go to sleep on positions and wake up always. And on the rare occasion that something was down majorly, other things would pick it up. But I'm not, other than spot, and at certain areas in the chart, there's, I'm trying to temper expectations. So yeah, not exactly exciting right now. We're kind of in between levels that I would want to trade. So again, if you guys have any questions. BTC kind of looks like it's something that wants to drop a little bit more. So I could understand someone wanting to short to the bottom of the range, meaning to right around 30K instead of 30,002. So bottom is actually 28.8, 29.8, 29.9 region, but I don't know if I would want to get that aggressive. There's no reason to force it during the stream just to take the trade. A lot of my hedges I close out after a little bit of a development. So after price bases out, puts in some kind of constructive price action. I'll very rarely close them out after just tapping a level. So I want to kind of reevaluate things, let price base out. No, Hans, I don't do that anymore. I'd rather just know what good opportunities are worth getting aggressive for, period, even with my full account size, than try to grow small accounts. Gold took an absolute beating today. So interestingly enough, I mean, it was already making new lows, so it's actually not interesting. The S&P was holding up more than the NQ quite significantly, but we've since corrected. My hedge gets me. My head. What do you mean? How do I determine the size of it? If I want it, it depends. If I'm getting completely flat, or if I'm. Hold on one second. I stepped away from the mic for a second. My shag carpet was caught on my wheel. If I'm getting flat, my hedge is just I'm getting delta neutral. It's one contract for $1. So if I own, if you have $1 million of BTC, for example, then you would sell 1 million contracts. And it's easy if you just have spot BTC and you're on an exchange and you're using BTC margin products, then you could just 1x sell everything. Depend on how much of a hedge you want to have, though. If you want to just take some size off, you might just sell, half the amount of futures against it, or 3/4. It depends on how flat I'm trying to get. I might hedge with alts instead, right? If I think they're going to have more downside capture, I might as well just short alts if I think BTC is going to drop. BTC options on Bybit, I think they're going to gain in popularity. Right now, they're cheaper than Deribit, but there's less depth. You can't get liquidated on options. That's right. There are other risks, obviously, but no. And they're not path dependent. And that's obviously part of the non-liquidation thing. But they're not as liquid, and they are time dependent. All right, guys, probably going to wrap it up. It is around noon, 12 p.m. New York time. Not really anything special during the stream trade-wise. Closed out, what was that? Closed out 2 trades. Closed out 1 trade. 2 trades against me before stop. Closed out 1 trade for just fractions of a point. Or 3/4 of a point, I should just say. And yeah, that's it. I mean, we're between levels. I can't really see any reason to trade here. Need actual development to occur. Shout out to the sponsors. Shout out to Crypto Watch. Make sure you check out the platform. Desktop platform is awesome. Again, all of these boards. So hot pair board. This is I had this set up for ARB across all exchanges at one point. All these boards are in the Discord, and the Discord link is below in the description. So shout out to Crypto Watch. They have a desktop and a web-based platform. So the web-based platform has a couple other features that are not yet on the desktop, but I believe everything is making its way over to the desktop platform. And shout out to Bybit. Bybit's always been a great exchange. Listen, no exchange is going to be perfect, so just get used to that in this market. At some point, wherever you're trading, that exchange is going to piss you off, because crypto exchanges as a whole they don't operate as well as legacy exchanges. But I think Bybit is probably the best option right now, other than Binance. And I think it's awesome, like someone just said, that they offer options, because it's just having a one-stop shop for everything, spot, futures, options. I think that gives them a massive advantage, and they still currently offer no KYC access. But like I said, just expect that at some point that's all going to change. Journal all these trades, mess up the stats. No, the Sierra chart journals it all for me. I could plug it into EdgeWonk after. So that's what I end up doing. All right, guys. I'm out. Enjoy your day. I will be live